current climate. Just some housekeeping rules. Again, tonight's course is CE credited. You will receive 1 CE credit via email over the next 7 to 10 business days. There is a question and answer section at the top of your screen. I encourage you, if you have any questions, please feel free to ask those questions as we go along. I will try and get through some of the questions during the webinar, and we will have some time at the end for general questions. So now everyone's filled in the poll. We'll get started in 1 minute. So again, thank you very much for joining. My name is Lee Tessler. I'm one of the senior consultants at Cirrus Consulting Group. I've been at Cirrus for over 2 years now, originally from the UK. Most of my professional career working with professionals, advising healthcare professionals like yourself in financial planning, holistic planning, really helping prevent doctors like yourself in any liabilities that they come across in their business. And tonight we're really going to focus on the dental office lease. Whether you are a new start doctor, associate looking to start a practice, you have a current lease renewal coming up, you're looking to either expand, maybe relocate, or if you're coming up for transition in the next 5 to 10 years, or even if you're a building owner, tonight's course will be really beneficial as we delve into a lot of different topics. So my job tonight really is you're not to walk away as experts, but that you have some knowledge and really understand the fundamental importance that the dental office lease can have to your business. Now I want to start with these 3 numbers, 85, 54, and 80. 85, 54, and 80. What do these numbers mean? Now, 85% of dentists currently have a lease that can prevent them from ever selling their practice. 54% of dentists across North America are overpaying in rent for their practice. And finally, 80% of landlords will structure a lease that will give them at least 50% of the proceeds when the practice is sold. Now, hopefully you will see by the end of tonight some of the important legal provisions in the lease. It's not just the financial implications of the rent that you pay each month, but the 30 to 40 page document that many of you may not have read all of it, and you're not going to be the first, you won't be the last. So we're really going to delve into this tonight and understand a little bit more. So I think it's important to you to understand a little bit about who we are and Cirrus and how we've been helping the dental and healthcare community for over 25 years. Essentially, we're a healthcare and dental specialized tenant representation firm. We were founded in '94 by dentists, for dentists, actually in Alberta, really for the reason that the dental tenant was being taken advantage of by the landlord. As you know, it's an expensive business to enter into, and it can be an extremely profitable business to exit out when it comes to transition. Now, since our inception, we have negotiated over 12,000 dental and medical office leases. I would say that 75% of our clients are dentists, but we do look after other healthcare professionals such as veterinarians, rheumatologists, general practitioners. And what makes us unique is that we do everything in-house. So we have an in-house legal team and leasing and consulting department, all with a background in healthcare and real estate. And annually, we represent over 500 doctors throughout North America. We deliver continuing education seminars. Normally, we're able to travel and see a lot of you in person. But in this current climate, then we're doing, as you're sure you're used to, many Zoom meetings. So we're still delivering over 100 continuing education credits annually. And we lecture at most of the major dental conventions, such as the Greater New York, the Pacific Dental Conference, which was actually back in March, the last place that I actually went to before we went into lockdown, the Yankee Dental, the California. We really do work with dentists nationwide. So I just wanted to pull up this slide in terms of the current market conditions that we're seeing in Calgary. I mean, the Calgary economy has been affected since the COVID-19 pandemic. There has been some job losses, as we were well aware, and we have seen an increase in vacancy rates. I'm sure that you've probably seen on your way to work, lots of for lease signs. At the moment, the rents are sort of staying firm, but we are starting to see it become a much more tenant-friendly market. Landlords have begun to offer more incentives, fixturing periods, additional net-free rent incentives, particularly during the uncertainty of COVID-19, whereby the dentist has become much more of the anchor tenant. So landlords are certainly keen on securing the dental tenant for a longer period of time. Now I can go into a bit more specific detail. You have to bear in mind it does depend on exactly where you are demographically, what type of building you're in, if you're in an office, a medical practice, or you're in a retail strip plaza. So, you know, I can definitely go into more detail on a one-by-one specific case after this webinar for sure. But this is to give you an idea of current market trends in Calgary. So what's the purpose of today's webinar? So like I said, we're going to look at the importance of the office lease agreement. We're going to look at some of the key terms and conditions within your office lease agreement. We're going to give you some practical advice on negotiating lease agreements. We're going to just get a little bit granular on a couple of provisions. Now, the first slide I wanted to just talk about, because I do have a lot of doctors that I speak to on a regular basis in Alberta and across the country who still have, you know, the idea of sometimes that they want to buy versus leasing. In some cases, I've had the same conversation with doctors for years and years, and they're still continuing to lease. Sometimes it's a pipe dream to have that building, to own that building so that they don't have to deal with a landlord, but it's not always realistic. And especially in the current climate, you have to weigh up quite a lot of different factors. So I just wanted to talk to you a little bit more about some of the pros and cons when it comes to buying versus leasing. Now, in terms of buying, obviously it does require a large upfront investment. So it does hold up some of your capital. And also you become a landlord. You, in theory, you have a second job. You are responsible if you have, you know, multi-tenants, if something goes wrong, whether it's, you know, the roof is leaking or the toilet's blocked, there's a flood in the basement, whatever it is, you are now responsible. So if you're still practicing, now I'm sure if you have a property management company, that will take care of this. You are still going to be the one that's going to be called. You have to take into consideration that, yes, you will have greater flexibility on how you use the space. You don't have to answer to anybody. You have more freedom and control, but you then become the landlord. And if you have tenants, if you have other tenants, you are responsible. And then if we compare leasing, now that doesn't require such a big upfront payment. So that gives you more working capital towards, in building out the practice. If you need to update some of the equipment, or if you want to modernize any of the equipment or spend some money on marketing, you have that capital. And you also have the flexibility to relocate or expand. What some people don't always realize, and I've had this many times before, where somebody's bought a practice, bought the location, and what they didn't realize was, the location itself, the demographic, when the markets started to crash and unemployment rates went up around 2008, suddenly the space that you're in becomes less attractive, and you lose some of the clientele, and there's more buildings that are going up in different areas. You are then stuck at that one space. So doesn't necessarily give you the flexibility. If you outgrow the space and you need to increase capacity, if you own the building, it's not something that you can just upstick when the lease expires and relocate. So there is a number of pros and cons in terms of when it comes to buying versus leasing. But I think the main thing that I want to get across is all of this is covered in the office lease. All of these flexibility and all of the pros and cons comes under the dental office lease, because no matter what, even if you are a building owner and you own the practice, it's still very important that you have a lease, an arm's length lease that's in place to separate the building from the practice. If you in the future decide to actually keep the real estate and you want to sell your practice, then any buyer that comes in is going to need to see a history of rent, and is going to need to see a lease. It's not just a case of owning a building and then that's it. And if you do eventually decide to sell the practice and keep the building, then you want to decide who is responsible and what they're responsible for, and that is all written out in the lease. So what is a lease? This is a question that I ask at all my seminars, mostly live seminars. So as this is a one-way webinar, I will tell you, majority of people will say to me it's a contract between the landlord and the tenant to really outline how long am I committed for at the space and how much am I paying for that space, which is technically correct. But what we, in all our years of doing this, has established that it's really a check. And it's one of the biggest checks that you will write in your professional career. And I'm not talking about personal, if you're buying a house. I'm talking professionally. It is one of the biggest purchases that you're going to make when it comes to leasing a space. If we take into account that statistically, an average dentist will stay in their space for 22 years, and we take a average square foot of 2,000 square foot, let's just say you're paying $5,000 per month. And I'm just talking about base rent here, nothing else, just purely base rent. We're not talking about rent escalations being increased with inflation. We're not talking about any operational expenses, any tax, maintenance, insurance, just purely the base rent. Now, if you're paying $5,000 a month, the simple math, you'll be paying $60,000 per annum. Over 10 years, you're looking at $600,000. Over 20 years, $1.2 million. So when you actually do get that lease, like I said, majority of you may have only read the first 1 or 2 pages and see how much am I paying and for how long am I paying for. And like I said, what we want to explain tonight is the importance of not just the financial implications of obviously what you're paying each month and for how long, but some of the other legal provisions that can have huge liabilities on your practice. But the bottom line here is you are writing a check for $1.2 million. And it's vital that you know exactly what you're signing and really understand that you are a very important tenant and everything is negotiable. But there is strategies on how to maximize your potential at your space. And we're going to touch on that a little bit further as we go along. So why is the office lease so important? Well, the office location is the foundation of your practice. If you drove up to your space this morning, you picked up your normal coffee from Tim Hortons or Starbucks, wherever you enjoy your morning coffee, you drove up, you parked outside your space, and if you went up to open the door and there was a letter, there was a 30-day eviction notice on the front of your door as you came in, what would you do? You're not an accountant, you're not lawyers, you're not somebody that can just pick up over the weekend and move. As we know, this is an extremely expensive investment when it comes to building out or acquiring a practice. Many of you may have actually built out a practice from scratch. You're looking at anywhere from $150 to $250 per square foot just on build out. And that's not even including any equipment. So an investment can be anywhere from $500,000. Now, if you've invested that amount of money into your space, the key is the lease, because you do not want to be in a position whereby, for whatever reason, as we'll go through some of the reasons that can cause you problems in the future, you don't want to be in a position whereby the landlord can give you 30 days notice and, you know, can kick you out and terminate the lease. Because without your location, without the community where you've practiced, where your patients come to, without that, you have nothing. Now, again, any of you who actually have built out a practice or relocated, it's very difficult, expensive, and time-consuming to move. Now, I'm not saying that it's not possible, and I'm not saying it's not done, because it's done, and we've helped many people do that. But what we're trying to get across is that when it comes down to it, you want to be able to do all these things with an informed decisions under your own time and your own restraints, rather than being told by a landlord, you've got 30 days to move, or I'm giving you 30 days notice and we're relocating you to another part of the plaza, which is not so nice. And then, you know, you're under the clock and you're struggling because of something that was written in your lease. And the practice sale, like I said at the beginning, when it comes to selling your practice, and many doctors make the mistake, they find a buyer, they'll have the practice appraised, they'll find a buyer and they'll dot some I's, cross some T's, and at the 25th hour, they realize that they have to ask the landlord for permission to assign the lease. And within that assignment provision, the landlord can make it very difficult by increasing the rent, asking for some considerations and proceeds of the sale. and suddenly your asset becomes less desirable. One, if you have to give money to the landlord, or two, if the landlord makes it difficult for the oncoming buyer to come in. So again, we'll get a bit more granular as we go along and help you understand why this can be a problem. But the other thing that the lease can do is give you leverage. You know, we always recommend at least 2 years before expiry, starting the process of the renewal, simply for the reason that, as we've talked about, can give you time for whatever reason. If something becomes unstuck, if we don't like what the landlord's offering us, or it's unreasonable, if we have enough time, then at least we can make the right informed decisions and not be forced to move. So it's important to know some of the critical dates on your lease. If you have options to extend, you will certainly have a time period whereby you have to give notice to the landlord, and if you miss any of those critical dates, then they become null and void. So the lease is extremely important in all of this. So what are the 3 key sellable components of your practice? When it comes to a practice transition broker, or what do they look at when it comes to appraising the practice? Well, one, they take into consideration the equipment. They look at what state of the equipment is in, how old it is, how new it is, what sort of value is it worth. We'll also look at goodwill. But what does this mean? What does goodwill mean to you? Patience charts. You know, how do you evaluate on buying the space? I mean, what percentage of the space is it worth? You know, you've been part of the community. Everybody loves you. You're the dentist. Everybody wants to come and see you in that community. You know, the goodwill can become down to the fact that everybody loves you. Now, they may not necessarily love the new dentist, but the main thing is the lease. Now, the lease can impact 100% of the sale. Even if, like I said, you have it valued, you've got good equipment, goodwill, you've got great thousands of active patients, good production, still comes down to the lease and how the lease is structured and how much term is left on the lease and is it transferable, which will really just enable you to actually sell the practice and assign the lease to somebody else in the future. Now, what should your office lease do for you? If you had a magic wand, you know, what would you want your office lease to do for you? So number one, you want it to provide fair and affordable financial terms. So what do I mean by that? Number one, like everyone, you want to be paying market rents that are comparable with the current market. And you want to make sure that if you are paying any additional operation and costs, any tax, maintenance, and insurance, especially the maintenance, you want to make sure that number one, what you're paying for is fair. And if you are paying for snow removal, garbage removal, cleaning, maintenance, are these things being done? And it's very easy for the landlord to make changes, wholesale changes to the structural elements of the building and change the roofing, improve the car park, all of these things to make their location more desirable and just pass the cost simply to you. Now, what you want to make sure, again, is one, if these things are happening, you are paying for what you're actually getting, and two, you're not being slapped a huge bill in 1 year because they've decided to do a massive redevelopment. Now, we want long-term stability and security. Now, in the ideal world, when it comes to negotiating, whether you're starting a practice or renegotiating, we want to look to try and gain a 10-year term with 2 5-year options. Now, many doctors make the mistake and say, well, you know, I don't want to be tied in for that long. I don't want to commit. I don't know where I'm going to be in a couple of years. Now, what normally happens is that every 2 years, the lease gets renegotiated. One, do the rents ever go down? No, normally the rents are higher than what they were before. And two, if you're just renewing for every couple of years, where is the security? You've just paid over $500,000, whether you've built the practice or you've acquired it from a retiring doctor. If you've invested over $500,000 in this practice, you need to make sure that you have enough term, enough runway, one, for yourself to secure the long-term future, so that you can't have a letter whereby you're just being kicked out because you've suddenly run out of term and the landlord doesn't want to renew your lease. And that gives you some sort of predictability and security. And also, as long as the lease is structured correctly and you're able to sell the practice, then you know you have leverage if you're going to a landlord, especially in these current climate, and saying, you know, I've been a good tenant, I've always paid my rent, never had a problem, and I want to stay here for, you know, the foreseeable future, and I'm willing to commit to a 10-year term, then that's going to be music to a landlord's ears, especially in this climate where a lot of the retail sector is being hit hard. And as I said before, the dentist, the healthcare tenant is becoming more of the anchor tenant now. And with many more vacancies that are appearing, some of the dentists and some of the other healthcare professionals are saying, well, you know what, if I'm not going to be looked after here and I'm going to be spending another $500,000, $1 million over the next 10, 20 years, then maybe I need to look elsewhere. Maybe that space that across the street has just become available with a nice ground floor, you know, windows, corner unit that suddenly be vacant. Maybe I want to find out what's happening. Maybe I want to be there. So it's really important to know, one, where you are at and what you're worth, and secure that stability. We also want to minimize risk and exposure. So again, what do I mean by this? So minimizing risk. Many of you who started a practice from scratch, or when you first started a practice, would have had to sign a personal guarantee. Now, this is very common. No landlord's just going to let you take over a long-term lease. They don't know any of your credit history, and they may ask you to sign a personal guarantee. What we want to do is not have the personal guarantee for the duration of your working career. Now, there's things that we can put in place to say, look, if you've been a good tenant for 5 years or 10 years, or paid your rent and always paid on time, then there comes a time where we shouldn't have to provide that guarantee, or we should at least be able to limit the guarantee to a certain number of years. And also your exposure. If something was to happen to you, God forbid you were incapacitated or you passed away, we pride ourselves on what's called a death and disability provision, which we try to include in any leases that we negotiate or renegotiate. what this does, it gives your estate the option, regardless of the number of years remaining, to terminate the lease should you be unable to practice wet finger dentistry through an illness or a sickness, God forbid worse, you were to pass away. But we also want to maximize your flexibility. So one of the ways to maximize your flexibility is by having, and again, this just depends on the type of property you're in. One, we want to have the right of first refusal. So if you have tenants adjacent to you, if you have some spaces adjacent to you that become available and you are at capacity and you could think, you know what, I could do with some more space, and the space next door comes available, you want to be the first person that gets right to expand next door. You would hate to see another tenant come next door and then think, well, hang on a minute, I could have used that space. That would have been perfect for me, and know nothing about it. And in some cases, and again, this is depending on the type of building that you're in, you want to have the right of first refusal to actually buy the building or buy the property, depending if you're in a strata unit, or, you know, some cases it's not going to be an option, but in other cases there may be that option. And if the landlord is selling, you want to have the first right of refusal to buy the building that you're in. And also, the key thing again, you want to enhance your ability to eventually sell your practice. So if your lease, any bank that is going to lend to a potential buyer in the future, they're going to need to have at least 5 to 10 years term remaining to amortize the loan that they're going to need to take out, because the chances are that they will probably be coming out of dental school. You know, they'll probably be in debt, and they'll need to take out a loan, and they'll need the time to pay back that loan. So anyone that wants to buy the practice, the bank will require the lease to have at least 5 to 10 years remaining on it. So again, as long as it's structured correctly, it doesn't mean if you have a 10-year lease that, you know, you are stuck for 10 years and you can't ever sell the practice. That's not the case. If you're in a desirable location, and I'm sure that there'll be plenty of people that would love to take over your practice. But what we want to do is make sure that the landlord doesn't take any of your hard-earned money that you've sweated blood, sweat, and tears for 30 years, and then prefer it come to the landlord to say, sorry, I don't like the person that you're putting in front of me. They don't have a good credit history. And I actually, if you want me to assign the lease, then I'm going to want 50% of the proceeds to sell. And I can tell you, we've seen this on numerous occasions. So if any of you are thinking, well, that doesn't happen, I can tell you that it does happen. And it happened many times where I know for a fact that a dentist was selling his practice for over $1 million, and the landlord wanted $500,000. And in the end, the tenant had to write a check for $120,000 just to be released, so he could walk away and sell his practice and retire. So it does happen. So what's in your lease? So we're going to look at a couple of provisions in a little bit more detail now, just so that you can get an understanding of, like I said, that, you know, the financials are clearly important, what you pay each month, your bottom line. And I'm not taking that for granted at all, because, you know, that is your bottom line, your revenue, your rent, your payroll. That's extremely important. But what I want to just explain to you is how, in a couple of provisions, again, for example, this is the option to renew. This is found in 90% of leases. Now here you can see that provided Dr. Joe Black shall remain as the tenant. Now the tenant is capitalized, and what that means is the options that Dr. Joe Black was given were only given to Dr. Joe Black, and they're only good as long as he remains as a tenant. So I was working with a doctor in Red Deer who told me that, you know, he's looking to sell the practice and he's got 12 years left of his lease and it's no problem. And when I said, look, let me have a look at your lease, let me just have a look through it, what it turned out was that the doctor actually only had 2 years remaining, and he had 2 5-year options that were not transferable. So where he thought he had 12 years lease term remaining, he only had 2 years remaining, because the landlord would say, well, I gave those 2 5-year options, I gave them to you, I didn't give them to somebody else. And if somebody else wants some additional options, then they're going to pay some additional rent. So that's just one example. There's at least 3 or 4 other obligations under this lease. You know, again, has the tenant been in default? As long as they haven't been in default. Now, what does default mean? I mean, there is a number of reasons that the landlord can find you in default so that you don't have to renew you as a tenant. I had a client that was been at the same space for over 20 years, always paid her rent, was a wonderful tenant, would give, if she had to give 9 months notice, she would give at least a year when it comes to renewing the practice, when she wanted to renew her options. And then the last year, as she'd always done, she'd given the landlord more than sufficient time to renew her lease. She had another 5-year term that she wanted to exercise that option. And she put it all in writing, and she wrote to the landlord, and the landlord declined her offer to exercise her option and basically gave her notice that he was not going to renew her lease. Now, she was obviously, you know, beside herself, didn't really understand why, what had happened. And then it turned out that the landlord, when we actually got involved at this stage, the landlord sent an email with an attachment photo. Now, on that photo was a picture of this lady's front door with really, all it said was Dr. Smith, for example. I don't want to mention a real name. And it said her business hours. And it basically said Monday 9 to 5, Tuesday 9 to 5, Wednesday 9 to 5, Thursday 8 till 7, and Fridays closed. Now, in her lease, it said that she had to have continuous business hours for the plaza. She had to be open from Monday to Friday. So they found her in default of the lease. Now, many of you may be asking, so why have they gone out of their way to, you know, find a problem with a tenant that's always paid her rent, never been a problem? Why are they trying to get rid of her? Well, the answer I can tell you was one word, and that word was Starbucks. Now, Starbucks had come in and wanted to lease this space where the lady was. She had a beautiful corner space, and the landlord was basically looking to find any reason that they could get her out of the space, because Starbucks were, first of all, willing to pay a lot more in rent, and the landlord receives percentage of some of their revenue. So just by her not being open on Friday and being in default of the lease, which was written in the lease, in their argument, she had defaulted and her options were null and void, and she had to find a new space. Again, that's just one provision that's found in 90% of leases. Now, one other provision that I want to go through in a little bit more detail is the assignment and subletting provision, which is found in 75% of dental office leases. And this really is an important provision. Like I said, this gives you the landlord the authority when you have to ask permission to transfer the lease. Normally, this is in conjunction with a sale or an acquisition of a practice. Now, the first thing it says is you should receive consent of the landlord, and any request shall be in writing. Now, this is quite common. You are not going to be able to just assign the lease to anybody without first getting permission from the landlord. But if we look a little bit further and we dig in a little bit more, in this scenario, the landlord has three choices. One, to simply approve the tenant's request to assign or sublet the premises. Two, it can simply just decline the request to assign the lease or sublet the premises. Excuse me. And three, can terminate the lease agreement upon the effective date of such proposed lease assignment or sublet. So just for asking the landlord for permission, the landlord can terminate the lease agreement, just like that, which is a termination clause. Now, what would that do if you just reached out to the landlord and he said, sorry, I'm terminating the lease, just for you asking? And additionally, should the landlord consent to any assignment, it says that the landlord shall have the right to revise the minimum rent to be paid during the remainder term or to the greater of the current market rent for the lease premises or 15% greater than the current rent. So you've now agreed a price with an incoming buyer. Everything's been agreed, everything's been verbally agreed. And then when you come for permission, the landlord says, yeah, sure, no problem, but just to let you know, the rent's going to be increased by 15%. Now, I know if I was advising that buyer, my offer to buy your practice would go down by 15% overnight. So that could cost 15% in you selling your practice. It gets worse. So furthermore, should the tenant receive any rental income, cash goods, or any form of consideration in connection with the assignment of the lease over the current base rental rates payable to the landlord in any fiscal year, the difference between the annual rental rate and such income, cash goods, or other considerations shall be paid directly to the landlord within 30 days. It's written in 75% of leases. Now, like I said, if you pay $60,000 per annum and you're selling your practice for $500,000, the landlord is entitled to $440,000. $440,000 just because his location is where the foundation of your practice is. His argument is, well, I've helped build up your business. Now, to me, that's not a good enough argument. But if it's written in the lease, if it legally says he's entitled to consideration above and beyond, then he can argue and he can make it extremely difficult for you. Now, the last thing in this provision, let's say after we've got through this, we've managed to actually agree and get the landlord to assign and approve the assignment of the lease. It then says, notwithstanding the landlord's consent to any assignment or subletting, the tenant shall not be released from its obligations under the lease and shall remain liable for any failure of the tenant or its assignee's future to observe each and every covenant of the lease. So what this is saying is that, let's say you do agree and the landlord agrees for you to sell the practice and a young associate takes over after getting through a lot of the red tape. Now, this associate takes on too much debt, buys a nice new house, buys a nice new car, and after 2 years, business is not so good, goes bankrupt. The landlord can come after you Even though you've sold the practice and been retired for a couple of years, the landlord can still come after you. You're still on the hook. Now, the last thing you want to do if you're retired and on the beach or on the golf course or wherever you want to enjoy your retirement, the last thing you want to do is go back and start practicing dentistry to pay the rent. So as you can see, this is just, again, one provision with at least 5 red flags within that one provision. So it doesn't matter if you're selling your practice tomorrow, 5 years, 10 years, 20, 30 years. It is vital that you get this structured correctly. The sooner you get it structured, the better. The last thing you want to do is, as you're looking to sell the practice and you find all of these red flags in your lease, and that can affect the sale. So what are some of the other critical business impacting clauses that we see? Now, I'm not going to go through every single provision just for the interest of time. Some will have a demolition provision in place. Some will have a relocation clause as well. It's just important that you understand if you do have, and there's plenty of leases that will have a relocation or a demolition clause in it. That doesn't mean that you can't sell the practice. It doesn't mean that you can't continue to work, but you need to understand, what does that actually mean? What does a demolition, how much notice period does that give you? If they're going to relocate you, are they going to relocate you to the same type of space within the building? Are they going to pay for all the additional costs? They're going to make sure your equipment is transferred and everything to the same, the cabinetry to the same spec that you had at the beginning. The death and disability provision, we talked about that. I just want you to understand that there's at least 20 other provisions that can have huge impact on your practice. There's a couple more slides I want to talk to you about. This one here is what we call the tenant lease cycle. We've actually got this from the landlord side, someone that actually used to work for the landlord, just to give you an idea of, being in the mind of the landlord. Now, this is why we say that 24 months before expiration is a great time to start to engage the landlord. That doesn't mean that next day you're going to sign a new, it can take 2-3 months to negotiate a renewal. But what we want to do is we want to start the conversation at this time, because for whatever reason, if there's a problem, if you are actually looking yourself to maybe expand or relocate, you need time to find that space to actually build out a new practice. Now, the landlord might say, oh, we have plenty of time, and doesn't respond to your emails, keeps delaying and delaying you. Their job, they want to get you into this area here. They want to get you into the sort of 8 months. They want to get you into that red zone, because they know that the longer that they can leave it, the less likely, one, you are going to move because you don't have enough time. And two, they know that in terms of from a leverage standpoint, you don't have that opportunity to even negotiate or even pretend that you are going to move, even if you're not going to move. It's a game of chess, it's a game of poker. And, there's certain things that we do that give us that advantage when it comes to negotiating. So, the one thing I wouldn't say is, like, when we finish this webinar, don't panic, don't phone up your landlord and start saying things. Just, it's important to know the critical dates, when your lease expires, exactly when the option to renew, if you do have any options, what are those dates, and just make sure that you track those dates. Now, in this current climate, we are seeing an unprecedented opportunity for, lease renewals, long-term lease renewals, where we're having the ability to reset some financials and secure, a longer-term lease, which is much more tenant-friendly. The landlord is certainly more willing to listen to new offers, to new proposals, and to make sure they can keep some of their good tenants rather than, you know, losing a lot more tenants than they're currently losing. And if you're looking to start a practice, or if you're looking to relocate, or maybe you want to set up a satellite office, these are incredible times. The financing is at the lowest of our lifetime. Equipment and supplies. I know Henry Shine, who we work very closely, who helped sponsor tonight's program, will certainly look after any of you who are interested in some new equipment or some supplies. And like I said, landlords are desperate to fill vacancies. Really doesn't make any sense for them to have too many vacancies in their portfolio if they can help it. So how have Cirrus and how have we been successful? For 25 years, we've had over 100 5-star Google reviews. The majority of clients, all of them have said it's the best money that they've ever spent on their practice. So why are we successful? What do we do that's successful? Well, you know, number one, like I said, we do this every single day. It's all we do. Day in, day out, we negotiate with landlords. We have 5 or 6 professional lease negotiators that spend all day, every day, negotiating on behalf of the tenant. When we're representing the tenant, we're not representing the landlord. In some cases, you know, when it comes to brokers, I don't want to disparage because there's a lot of good brokers out there, but you know, in some cases, the broker's getting paid commission purely based on the landlord when the deal closes. So their incentive is to make sure that the deal gets done as quick as possible. Now, where we differ is, you know, we would gather all the information, make sure that we identified your practice and career goals. So if you're mid-career, if you're looking to transition, if you're just starting out, try to align that within the lease agreement. We will review the lease for any risks, any liabilities. We pay for a lot of market research, so we know, one, what the current vacancies and what the current rent comparables in the area are, and then we come up with a treatment plan and a strategy developed in terms of our negotiation. Now, all these 5 things we do, and we haven't even reached out to the landlord yet. So we don't go to the landlord, we're not going in guns blazing. We say that we are remunerated by our clients, we're not asking for any commission, and we try and educate the landlord to say, look, you have a good tenant here, they want to stay for a lot longer, they've always paid their rent. There's a few things that we need to change to help grow their business. And in a lot of cases, we've actually made the relationship a lot better. In some cases, some people, they want to be chairside and they don't want to deal, and they don't want to be dealing with either it's a family friend or whatever. They don't want to be involved. That's not their profession. They're professional dentists, not lease negotiators. So we would spend at least 15 to 20 hours negotiating some of the economic, financial, rent escalations, free rent, tenant improvement allowance, fixturing period, landlord work, tenant work. There's at least 7 or 8 financial variables that we talk about. And then we would look at, like I said, at least 20 or so of the legal provisions to make sure that they are structured in a way that's going to protect you and your business. And then finally, we would review the final executed lease that you will be satisfied with. So as we're coming towards the end, I do want to leave some time for some questions. We do have what's called a critical dates and risk analysis product, which is $1,495, whereby we would spend 3 to 4 hours analyzing your lease. We would go through it with a fine-tooth comb. We would look at some of the critical dates and any of the legal provisions and the traps. We would schedule a call and we would go through our findings and come up with a treatment plan and how to negotiate effectively and what the ideal lease should look like for you. Now, thanks to our friends at Henry Schein, who have kindly sponsored tonight's course, and they are offering everybody who's attended. Again, this is on a first come, first served basis. So if you are interested in this complimentary lease review, which I would certainly advise you to take up on, please do send me a copy of your lease, anything pertaining to the lease, any lease amending agreement, the original lease. You can send it to info@cirrusconsultinggroup.com. You will see another poll coming on the screen in a second, just to give us a little bit more information. Again, pretty much similar to what we started with, but some of you that maybe have joined late. So if you are a tenant and you have a lease, if you know roughly when that lease expires, is your situation urgent? And the key one is, if you are interested in this complimentary lease review, rent analyst, please tick that box. And like I said, it's on a first come, first served basis. So as soon as I get the leases in, I will start making some time in my calendar to review them and to reconnect with you, so we can go through our findings and discuss your situation in a little bit more detail. Now, I'm going to leave this on the screen for a little bit. Now, if anyone has any questions, there is a question and answer section. We do have a question here. One of the questions says, what guarantees can you give when it comes to renegotiating with my landlord, who is quite a difficult landlord? Now, again, I will answer this generically because I don't know too much specifically about your situation in terms of the landlord. Again, why is he difficult? Because you've tried to do something in the past, and he's just said no. My answer to that would be, there's no guarantees in anything. But the one thing that I can guarantee, that the way that we have gone about doing, like I said, how we've approached and how we've been doing this, that I can guarantee that we get success, and whatever happens, we will certainly improve the current lease that you have. And in some cases, you may have to ask the hard question. If you're continuing to pay rent at a space where you're not being looked after, or you're not happy, maybe you have to look to see if there are other places or other options available to you. My answer really is that it doesn't happen. We're always successful when it comes to renegotiating. And if we feel that you're not being looked after, we would tell you, and we would say, look, this is what we would necessarily advise. But at least, again, you're making informed decisions. Any other questions? I'm just looking to see if we have any other questions. I think somebody's raised their hand. Please don't be shy if you do have any other questions. One question here asks, how long does it normally take? How long does an average renewal take? Now, statistically, again, from some of the data that we produce, our average renewal can take around 100 days from start to finish. Now, that's not to say it can't be done quicker. It just depends on the landlord. The landlord may have their own lawyers involved and how quick, they are and how responsive they are. But on average, you're looking at around sort of 90 to 100 days for a renewal. Okay, I think that because I am conscious of time, so I want to just say, I do have one more question. Is the situation in Edmonton similar to Calgary regarding landlord flexibility? I would say yes, very similar. Edmonton and Calgary are obviously quite similar kind of markets, but in terms of your question, it really would depend on your specific location, the type of landlord. Is it a REIT, a big institutional landlord? Is it a mum and pop? But there's definitely negotiations to be had in this current climate, for sure. I hope that gives you some sort of answer, but we can certainly chat in more detail afterwards. Definitely send me a copy of your lease. Thank you, Brian. Okay, so I wanted to say thank you very much again for all of you that have attended tonight's webinar. You will receive your continuing education credits within 7 to 10 business days. I really appreciate you taking the time out of your evening after work to listen to my British tones, and I hope that I've given some beneficial, valuable information. Please take advantage of the complimentary lease review, and I hope to speak to all of you again soon. Stay safe, and I will say goodnight. Thank you very much.